You know, I take one day off. Korea goes into martial law. France throws out their government. My goodness. We're going to get some unemployment today. Don't worry if you can't see the screen yet. I'm still loading up the YouTube. Consider today the unemployment part one, right? The numbers that we're going to get today aren't as big as the numbers we're going to get tomorrow, but it still counts. It's absolutely something we want to pay real particular attention to. Yeah, it felt like they were just waiting for me to take the day off to not look. All right. Should be good to go now. Good morning, everybody. So we have a market on wait. Um, Looks like Bitcoin, at least on Tether, is up. It's not waiting. UK flat with the Russell, NASDAQ, Hong Kong, the Dow, the S&P. Start getting into Japan, you're up about 0.25%. And we have a market that's just looking for data. So far this morning, we're not seeing the hedging that I would expect to see tomorrow. It doesn't mean that they're not hedging. They're always hedging. They're just not doing any additional extra hedging, at least not yet. The biggest time frame today seems to be 8:30. What we're not seeing on this docket is that there's going to be an event on Capitol Hill today for Doge. Right? It's not a singular event either. It's going to be different congressional meetings all day long. Maybe they stop and hit reporters up a little bit, you know, do the little dog and pony show, and then on to the next meeting. So that's going to be a trickle drip all day long. Um, Worth keeping in mind, right? And it doesn't matter if you like crypto or you like Bitcoin or not. It just matters that it is a risk on sentiment. That if we see risky money moving positively, then we want to pay attention to it. Got some moves in crude with another punt or pass the buck. So today's average daily range, since we're basically flat sideways, we don't have much edge towards trying to anticipate which way we're going to go, higher or lower. The ADR is back below 1%. If you remember, like a week and a half ago, our average daily range was 1.13. Now it's not even 1%. So this is a metric of volatility. It's asking how far do we move on a day-to-day basis? What's the average high to low, right? And if you think about it, price doesn't just move in a straight line. We open at 6 o'clock at night. We move up some, we move down some. Maybe we keep a little bit of the move to the upside or the downside, and we wrap it up for the day. So this ADR is really asking, what's the average daily range from the high to the low? And then it gives us those levels. But we're nowhere near either one. And we also have a really tight initial balance. Now, initial balance been around for a long time. It's been twisted over the years to be different things. And even if we just ignored the phrase, the initial balance, and only focused on what we have in front of us, that's a really tight range, whatever we want to call it. We could put squeeze indicators on it, measure it through all kinds of different metrics. It's just a really tight range. 6092 cog line on the downside and 6100 round number to the upside. That's an 8-point range. We're not even hitting the upper edge, right? So it's tighter than that. When price goes sideways like this, it's building up energy. It's one of the things that we learned from using the RSI Laguerre is the different ways that a market can build up energy. One of the ways that a market can build up energy really fast is by pulling back after a big run. So when it makes a big run, it'll burn energy, but it can pull back and recap some of that energy. Another way that it can do it is by going sideways like this. Energy is an odd phrase in the market as opposed to trend, momentum. Energy is a little different. So the analogy that I like to use is playing catch out in the yard. If you take a ball and throw it, as it's moving through the air, it's losing energy. You put energy behind the ball, you threw the ball, it's losing energy. If nobody catches it, the energy just continues to fade and the ball hits the ground. Take a ball and throw it off of a big building. As it falls, it's picking up energy. So when we have a market make a move, the move can be done to get energy, like this pullback that I was just talking about, or the move can be done with energy behind it so that we have to worry about what are we going to hit and do we have enough energy when we get there to break through whatever it is we're going to hit. Right now, we're building up energy. If we make a move, we got to be able to ask that question, what are we going to hit? How much energy do we have? Will we be able to get through the other side of whatever it is we're going to hit? We've been waiting on this data all week. While this range is really obvious to see, the range that we had been holding, we expanded out of yesterday. Then we held again into the afternoon and expanded late in the day with news out of France. And now we're holding and chopping again. This is a market really looking for some answers. And depending on how the morning goes, I think we're still going to be on wait. Sure, we could see what we have yesterday, where we were waiting and then we got a little bit of juice and then we just paused again and we're waiting. The big numbers are tomorrow. So that's what you want to continue to focus on is the big numbers are tomorrow. We're going to come out of this. There's no way that we will stay this tightly wound all the way till tomorrow, 24 hours from now. That's not going to happen. So if we're not going to keep that tiny little range, then we've got yesterday's RTH range, and that's tight enough. 25 points, 26. It's tight enough to keep us range bound and wide enough to give us edges. And it's very likely that we maintain that until tomorrow for the non-farm payrolls. It also doesn't touch the ADRs on either side. If we get a breakout of yesterday to the upside, the ADR is the target, 61.22, 61.24. If we can break out of yesterday's low, the RTH low anyways, then we'll target the lower ADR, but I think we'll overshoot that, and we'll focus more on all of yesterday's low, which is underneath that ADR, 60.63. We could continue to bleed if we make that sort of downward move, and that would have us leaning towards Tuesday's low, 60.50. It's a round number. It's an options level. It's likely that we just continue to gravitate to that level. So for the downside, step by step, break our own Globex low, 60.92 cog line, break the RTH of yesterday, then the Globex of yesterday. There's a half back that you could focus on for Tuesday, get through that half back, and then Tuesday's low. Level by level, right? Actually, let's keep that lower one on. So no matter which way we go today, we've got it lined out. But we got to get there first. So what we're looking here is last week's VWAP anchor. There's no reason to believe that we're going to go low enough to get tangled up in that. And then we've got the anchor for the month in cyan, also to the downside. For our own anchor today, it's so close to where we're at anyways that we're just chopping above it and below it. Doesn't have any value or insight to us right now other than like a mean, it's a midpoint. We're just bebopping back and forth. Today's channel outside of yesterday's channel's range, they're not touching or overlapping. That's bullish. Price opened above today's pivot point. That's bullish. Yesterday was a missed daily pivot. We didn't hit it, didn't touch it at all. That's bullish. And so far today, we have an MDP, missed daily pivot, and that's considered bullish. The thing about the missed daily pivot for today is, well, it doesn't count today. It only counts tomorrow. Markets generally hit that pivot 80% of the time. So one way to look at it is we have an 80% chance that when we break this really tight range that we're in, we're going to go down and tag that pivot point. But we are in a bullish bias, bullish stance, and still waiting on Spot Gamma's AM edition founder's note to see what the zero gamma index is, as if we need to say gamma one more time. Last time I seen it, it was in the positive. So, you know, if it's 2.5, which is what it was last night in the PM edition, positive 2.5, that also implies that breakouts will fail and we'll come back in. Just like this really wide channel here implies if we break out, we'll come back in. So if we do break out of yesterday's high, it's likely we don't close outside of it, that we'll come back again. Same thing with the downside break, but we would have to go all the way down to 60.63, break below yesterday's low, and then come back in again. Just keep in mind these channels and that spot gamma number, it doesn't make price breakout. It just tells us what to expect if we do get a breakout. This is a wide channel, so we don't have a lot of expectation for a breakout. And with the 2.5 positive gamma, it's hard to see how a breakout can stick and really grow legs and continue to run. The reason for that is in a positive gamma, if we break out and try to run, dealers are going to be selling into that. They'll sell into that strength. So we're in positive gamma. And if we break down, they'll buy into that weakness because we're in a positive gamma environment. It limits how far a market can run on a day. For a break to the downside, 60.18 is last week's point of control. 60.60 is this week's point of control. We kind of left it behind. It's interesting to note that with this breakout and this run and all of this pause through the overnight here, we're not really building anything out. Where is everybody? So on the one hand, we haven't run up into an iceberg. We're not hitting a ceiling yet. We're not seeing them, tap out at this level. It's still bullish. So a move to the downside, we've got 60.92. Nah, that's a little high. That's the shallow spot. 60.82. If that fails to keep us in line, then we'll drop down into 60.59. Then we'll take out this low 60.32 cog line, get into the point of control from last week. I just don't see that much negativity on the table, right? And when you look at this profile here, consider the same profile there, or in a smaller version, the same profile there, where we built the classic base, the classic D shape profile, and then ran up and paused into a small amount of liquidity, like a micro base before the next leg. Same thing again. Just working our way up, right? So this morning, the volume is at 50. Somebody asked me about this the other day, and it's been a long time since I really talked about what this lower indicator is. It's the cumulative overnight volume, and it starts at midnight, basically. All right. So years ago, I was trying to figure out how much trading activity there was in the overnight hours and find a consistent way to quantify it. And Thinkorswim has an indicator called cumulative overnight volume. So I took it and started watching it, and over the years, if you watch it enough, you kind of get familiar with the numbers, and you get familiar with what a normal trading day looks like. So that's all this indicator is doing. I added some code to it so that it'll mark the 7:30 volume for me, since that's the benchmark when we do the morning briefing, is where are we at? How much cumulative volume from the overnight do we have? So the number that I see, that 60 or 70, 80, it's only something that's familiar because, well, I've looked at it every day for the last couple of years, so I kind of know what normal looks like. But there's no wrong number. There's no right number. It's just a number just giving us some insight on how much participation we had last night. This is helpful to spot things like a really low volume, and when we dig into it, we find out maybe Asia was closed for a holiday, right? Or Europe was closed for a holiday. Though I live in the US. I really don't pay attention to other countries' holidays. So it's easy for me to forget them, overlook them, miss when some other nation is closed. So the lowered volume would stand out and usually helps me spot when a nation is closed for a holiday. On the other side of that, large volume, of course, shows exaggerated interest, kind of gets me looking around, asking additional questions, wondering why is it so high this morning? And then if they're hedging, are they hedging with volume or without volume? So if you look on Thinkorswim, you can find it. Just type in the word night. Cumulative overnight volume. It won't have all the additional stuff that I built into it, but you don't need that anyways. We're really close to the call wall on the upper side at 6111, and underneath us, the volatility trigger 6050. Well, that's cool. I'll have to check that out. Thank you. Thinkorswim recently added extended hours column indicators. Thinkorswim does a publication every month, and in that publication, they will tell you about their newest changes that they made, which often include new indicators, new watch list columns, new features. So you can hit that from the home screen, or you can hit that from the education. Either one would get you there. Just go to the Learning Center, it should have it. So appreciate that heads up. You just type for EXT, search for that, and you'll find the new indicators. So zero gamma, according to spot gamma on their indicator this morning, is 6017. We will be in positive gamma until or unless we go down that low. Now, that's generic, right? Throughout the day, there's levels of positive and negative gamma throughout above and below us. So we can be in positive gamma, rally up a little bit, and we'll be in negative gamma, rally a little farther, and we're in positive gamma again. It's not like just some clear cut above this line we're positive and below this line we're negative. There is a tool called the tracer, spot gamma trace tool. It is it's hard to work with, right? It's a lot. But that trace does show how there's like the if you've ever went swimming in big lake ocean where you have some water that's warm and then you move, and if you found a cold spot and then you move again and it's warm, that's like gamma. So sure, seeing the gamma line here, you know it's good enough, but just keep that in mind. It does run in zones. We would really get risk off and start digging into some zero gamma plays or negative gamma plays underneath this. They will sell into selling underneath this. So if we break below that and really start to expand, it can accelerate quickly. They'll dump it. They'll have to, just to try to stay delta neutral. So a 10-day, 30-minute volume profile, I'm looking at this thinking, what a mess. And we don't have anything here from like our classic patterns, the D shape or two Ds. classic P, lowercase b. We got nothing on that. It is just a mess. It's scattered all over the place. And there's nothing of value here. But that doesn't mean just because we don't have those profile patterns, doesn't mean we can't get a little bit of something out of this. So one, it is a really wide range compared to what we've dealt with lately. And over the next few days, we're going to lose a lot of this lower price action, unless we go back down there and revisit it, right? Obviously. So if we fast forward a few days and we get into Monday, now we've tightened it up to about 130 points, which is still pretty wide compared to what we've had recently. And again, if we don't drop down there by Thursday, we'll have this about 80-point range, which would be more in line with what we've been dealing with. And it keeps that point of control where it's at. If we don't build out a lot of volume here and bring that point of control up. This is a really tight range. I can't expect that we're going to hold that line and bring it up here. So it's more likely to end up around that 60 area, and that this will become our zone. Unless we retrace and give credence to some of these lower values below 6,000, basically. So for now, I would look at this point of control as the low, the structure that we need to maintain. If you were to mark that channel out from that gap where we had the Friday close and the Sunday open, and sure, the channel is, the gap is closed, but that channel would help you highlight that liquidity, and we should stay above that. We can come down and test it. We can, close underneath it, but we don't want to expand below it. We do that, and I think we're going to see some lower levels. So retesting 6,000 wouldn't be a negative. I think it would kind of be a positive at this point. Kind of reaffirm these levels that we have. We have a new VPOC from yesterday. That's a little off. You could make an argument for carrying forward the VPOC from Tuesday. We touched it, we didn't close underneath it. Now, this whole thing about the VPOC, so it's a point of control which tells us where the greatest amount of volume took place on that day. The reason we mark it is if we go back to where there was a lot of trading, it's likely we're going to see a lot of trading again, right? So it gives us a heads up on potential support or potential resistance, potential reactions in the market, an area where a breakout could stall. It'll hit that and, go back the other direction. So you want it on the chart. Does it matter if it's been, quote, touched or not? The reason we mark it as an untouched one is to show like unfinished business. Like, oh, hey, it hasn't even been hit yet. So if we go back there with that unfinished business, there's likely to be a lot of trading activity there. If we've touched it, then we've absorbed some of that liquidity. We've finished some of that business. There may not be as much trading activity the second time, the third time, the fifth time. How many times do we have to go back to it before it's no longer an area of interest? So when you're trying to build your own rules for this VPOC, you can be very strict and say, nope, it touched it. I'm done. It's not a VPOC. I'm not marking it. Forget about it. Or you can follow the textbooks who says, who cares if it's been hit? Mark it anyways. Always mark it every single day. But we're not marking yesterday's profile. We're marking Tuesday's profile. So if you're going to carry forward profiles from 2 days ago, 5 days ago, you want to have some criteria to it. Otherwise, you will have so many lines, you won't be able to see anything. It'll just be a whole mess, spaghetti of lines. So I have one from Wednesday, November 27th. We haven't hit that line yet. It has value to me. I'm keeping it. But I wouldn't want to have all of these other days because, well, we hit those points of control. We've taken it out with no reason to believe they have any value or interest to us whatsoever. So when we look at Tuesday and we see that it was touched, does it still have value? I mean, to me at this point, yes. If I had carried forward that one, we could see it was heavily traded. No reason to keep it. If I tried to carry forward this one, it was heavily traded. No reason to keep it. But the one that I just marked here at 60, 63, and 3 ticks, it was touched, barely touched. We didn't even close underneath it. I think if we go back down and revisit that level, there's still going to be a lot of unfinished business there. And I want to know if we're going to hit something. It's also worth mentioning that that's really close to the Globex low, which is 60.63. So 3 ticks lower, and you would already have that line because it's the low of that day. You would mark that level anyways. Technically, though, it isn't a VPOC because it has been hit. So just adjust it. That way we know it's not a true VPOC anymore. It's just a POC. Ah, I did the wrong one. There we go. That'll do. When you have a really tight morning like this, one of these ranges where you got a tight distribution, your classic D shape profile. We got TPO in blue and volume profile in green. I zoomed in on it looking for any, I can already tell there's nothing here, but if you're not used to doing this, the reason we want to even have them on today's, because we've been talking about looking at previous days profiles, but you can also have one on the current day's trading. And there's opportunities to see, say, where you've got a range and then price breaks out above that range. Did we hit a ceiling up there? Was there a pool of liquidity, a high amount of trading activity right up at that level? And we don't have it today. But what you could see is that there would be like a high volume node where we popped up and hit a massive amount of liquidity. We don't have it, but that's what we would be looking for. Otherwise, we just got a really tight range. We're compressed, we're waiting on data, and the longer we stay compressed, the more energy we're building up. The week's range, or the week's expected move, is 61.15.5. We're close. It's worth mentioning that we've gone many times in the past from one edge to the other edge in a single day. I know that it sounds a little wild. This range is the range for the whole week. But I've seen it happen more than once where we hit one edge and by the end of the day, we've hit the other edge. We're not expecting that today. I could certainly expect it tomorrow. Non-farm payrolls. Today, I think it's going to be more about holding the line, maybe grinding up a little bit higher. Even if we do sell off, it would just be most likely a sell-off to maintain the range of yesterday. Right? Just keeping the peace, waiting on data, not giving anything back. We're still less than 3% above the 10-week, so we're not overbought, we're not overextended, we haven't moved too far too fast, and it doesn't owe us any sort of pullback or mean reversion. The wave continues to move nicely to the upside. It's not some extreme jagged peak. No big cliffs to the downside either. Things are just looking good. That's less than 3 is fine. You know, even down to 1.5% above the 10-week would be fine. I think if we get below 1%, then the chances of us going down and hitting the 10 increase significantly. But we're nowhere near the 10, and we're not running too far, too fast away from it. So from the 10-week, things are looking good. Flip that over to a daily, and we're not even 1% away from the 10-day moving average. So that's a really good place to be. With all of this green days that we've got here on the chart, the concern is when you have that much green is that we've outrun things too far, too fast, you know, and we're due some sort of pullback or mean reversion. This is telling us, nah, we're good. We're not overbought. We're not overextended on multiple time frames. And that by default, it does not owe us any sort of correction or mean reversion in any way. Market is healthy. That's a good place to be right there. We got nothing this morning on the downside. For the upside, NASDAQ volatility. Okay, might visit that one again. Bitcoin, more Bitcoin. Airliners with jets, gold miners, nat gas, which is trash. So not sure what's up with industrials this morning. It's very likely from an earnings report. One of the heavyweights in there getting gut punched, but we can see the algo print way down here. That's the drop. It's probably hard for you guys to see it on the live stream, but it's way down here. Then ag behind that. Uranium also down. There was some uranium news yesterday with Google. I think it was Google, but I didn't catch it. I was on the move. So I still need to dig into it today. Semiconductors down, but they're not down enough. If our benchmark is 0.5%, this is only down 0.32. It needs to be down more, but we don't want semiconductors selling off, right? That would kind of go against the idea that we can grind higher and or hold these highs. So a little bit of weakness in semiconductors isn't a big deal yet. We just don't want to see that accelerate to the downside. These Bitcoin moves, however, I don't like this exaggerated gap up on a lot of this stuff, especially with it gapping right up into resistance. And it's not just this one name. This is BITO, but a lot of those Bitcoin names look just like that. They're gapped right into resistance. Airlines, I mean, if you look at jets, what a move, right? Since like mid-July, August, thing was on rails. And then it finally got a pullback, trying to close this gap, which if you measure gaps the way I do, this gap isn't closed. Other analysts do gaps differently. And so if you hear an analyst say that this gap is closed, it's because they're using a different metric. Okay. So it's not that I'm right and they're wrong or vice versa. It's just a different style of analysis. A lot of analysts measured that entire candle. I moved it over just so that we could see the wick on it, but they'll measure this candle from its highest point to its lowest point. And then of course we got this gap. And they'll say, well, the gap is closed if price touches that candle in any way. So that little tag right there closed the gap. I'm not saying they're wrong. I just don't do it that way. But I can't argue with their logic looking at, how Jets turned out. It closed the gap and away it went. And here we are with this really nice follow through breakout to the upside. So, when you're growing into your own technical analysis, sure, have your own rules, but at least try to understand where people who are doing it differently than you, where they're coming from. Got a failed bear flag pattern setting up on GDX, but it hasn't failed yet. At this point, it's just a big bear pennant, and it still needs a breakdown. If it fails, then we're looking to retrace back up into, 54, 55 and a half, but it has to do the thing, and it hasn't done it yet. For this morning, we got that little bit of a gap up. Let's get outside of yesterday's range and preferably get a new high on the week. I don't think we're asking for too much on that. I guess it would be get a new high on this structure here. It'd be 48.88. The December 3rd high. Yeah. Hot stocks continue to bleed. No change there. I think there's another conference coming up with those, but don't quote me on that because December 2 was the last conference that I knew about. And then there was one, a potential one. I'll circle back on it. They're not up enough anyways. And even if they were up, it would just be a little bit of a mean reversion, right? It's just trying to hold the line without completely selling off into oblivion. They're not ready yet. It's all about the news today, guys. No matter what's up, no matter what's down, keep your eye on the clock. The market's been waiting on this data all week, and it's getting a taste of it today. The final meal is tomorrow, but this is going to be a good start on it. Be careful, be safe. I'll see y'all tomorrow.